Hey folks, it's William with All Solar Texas. If you're looking into solar and you're thinking about financing your system, please don't make any decisions until you see this video. I'm going to explain the secret formula that they don't want you to know about that goes into all of those little financing fees that they charge based on interest rates. So you'll want to watch this to make sure that you're actually making the right choice for your budget. Stay tuned. Alright, if you've been watching this channel long, then you know that we have a practice of being very open, very honest and transparent, and that means that we want to help people understand all the complexity, even the little hidden dirty secrets of the solar industry, to help you as a customer make an informed decision and to protect you from making bad decisions that could be very, very expensive for you at the end. So with this particular video, we're going to dive into the secret formula, the hidden formula behind solar financing fees. Now, if you've been following this channel for long, you've probably seen some of my other videos. If you haven't, I recommend that you go check them out, where I kind of break down what solar loans do and what financing fees are included and how these different percentages interact and actually affect the overall price of your system. What I have not covered in any of those videos, which is why I'm touching on just this brief subject today, is the formula that they actually use to calculate those dealer fees as an overall percentage of your final install cost, that cost that you pay to the loan company and that goes into your final contract price for your system. Well, before we dive in a little bit deeper, let me just touch real briefly on what solar financing fees are. Now, many of these different loan options have different terms. You know, you can have a 5-year term, 10-year term, all the way up to 25, even 30 years, depending upon the solar financing company. But within those terms, you also have fixed APR options. You can have a 199 option all the way up to a 1099 option. So what's the difference between those different fixed APRs, and how is it that the solar company, when we are raising rates everywhere all across, you know, the United States with these federal interest rate increases, how are they still able to offer a 199 or a 299 or 3.99% fixed APR when all the other interest rates, including mortgage rates, are going up so high? Well, really what they're doing is they are loading in fees, and so you could think of it as buying down your mortgage interest points when you go for a mortgage. You could have a mortgage and they'll say, okay, it's 7%, or you could buy down your points, which means that we can lower your interest rate if you pay us 10 grand up front or another 15 grand up front, something like that. What they're doing is they're buying down their risk by getting some of that money up front. Now, again, I cover much more of this in detail in some of my other videos, but what I want to point out for this particular example is I'm going to be using an actual customer bid that I recently did. We're going to be taking a look at recent financing fee options offered by one of the largest solar financing companies in the industry right now. So if we go ahead and take a look first at what are the different interest rates and what are the different fees associated. So with this quick screenshot here, I didn't want to share what the company is because they all work the same. So this formula is applied for every solar loan company out there. It doesn't matter if it's this company or any other particular company. Most of these companies will have the same terms and they'll have the same interest rates, but they'll have varying percentages in their financing fee, or what they call their dealer fee. So in this option here, we could see that we have our 300-month term options here, which is our 25-year loan. That's 300 months. And then you see the variable interest rates that we have. These are all fixed APR. So we have our 3.99%, our 4.49, all the way down to a 9.99. Now, the column on the far right is the dealer fee. That is the financing fee. So that is the percentage that you pay to buy down your interest rates. So you could see at the 3.99%, which would give you your lowest monthly payment, and it will result in the lowest amount of interest paid over the term of that loan, which in this case is 25 years. You'll see it's at 36.99% fee, which is on top of the cost of your system. They're charging you an additional almost 37% in fees that you will be obligated to pay if you go with that loan option. Now, if you go all the way down to the bottom with a 999, much higher interest rate, you'll have a higher monthly payment because of that higher interest rate, but they will charge you 0% fees, which means that you will get that solar system up front for same as cash price. You will only pay interest, which means that if you pay that system off off in 5 years instead of 25 years, you're saving yourself 20 years of interest. All right, so let's go ahead and take a look at a real world example of this. So this was a customer that I was working with recently who was thinking about financing their solar system, but then decided against it once we went through all the different fee options and decided to instead go with the cash option. Now, it doesn't really matter what type of system this is. We don't need to talk about the specifications or anything because we're just looking at that hidden formula that loan companies use against the cash price of a system. So in this example, the cash price out the door, if they paid cash today, this would be their contract value. It would be $44,644. That would be the total amount that they would have to pay for that system. Now, that is the gross cost. We're not talking about tax credits and incentives or anything like that. In this video, we're just talking about cash versus loan options. Now, we went through what some of those other options were when it comes to solar loans, where you have different terms, different fixed APR percentage rates, as well as different dealer fees. So let's go ahead and take a look at what that customer would be paying if we decided to go with that 3.99% option, which provides a 36.99% dealer fee on top of the cash price. Now, before I make any changes, because remember, it's that secret hidden formula, I want to go ahead and do some basic math with you here just to show what that cost should turn out to be. So if we're taking our cash price here, which is $44,644, you would think that you're just applying the dealer fee on top of that cash price. So that dealer fee for the 399 option is 36.99%. Almost 37%. So what we would do to find out what would that cost of the system be, we would just take the cash price cost, we'd multiply that by 1.3699. So 1 being that cash price baseline, and then you're adding on that 3699, which is that percentage, which if I press equal, that gets me $61,157 or $61,157. So this system cost, cash price, applying that dealer fee of 36.99%, you would expect to pay $61,000. Okay, now let's go ahead and take a look and see what the actual price is once we apply the dealer fee. Okay, you see here that we have gone with a 25-year 3.99% option. I'm not picking on this particular company because all companies use the same formula and they all work it the same way. We know that this had a 36.99% dealer fee, and we calculated that out just a second ago and it was just over $61,000. So why is it that the system cost is now almost $10,000 more expensive? We took the base cash price and we simply added that additional almost 37%. We should be looking at a $61,000 price tag, but we're not. They've tacked on, what, $9,000, just under $10,000 in additional fees. So why is that? It has to do with how they actually calculate the formula, and here's the hidden secret behind the formula. So this is what the solar loan companies actually do. The loan formula is not the cash price multiplied by just adding nearly 37% on top of it. That would be just the $61,000 that we just went through. That's not how they do their model. What they do is they actually take the cash value, which is $44,644, and then they divide that by the total that you'll see here, which is $70,852, and that gets us to 63%, which is if you take 100% in potential fees and you deduct almost 37%, which is their fee option, what you're looking at is 63% left over. So what they're doing is they're not taking the cash price and just tacking on nearly 37% in additional costs. What they're doing is they're taking that, using that other formula to apply a 63% reduction in cost to make up that 37% in that interest rate. And so you end up paying a much higher cost. Now, how much higher? How much more above the actual cash price are you paying? We know it's not just 37%. So what are we actually looking at? Well, to get the true cost of the system, what is that actual percentage that you're paying on top of your cash price? We just have to do the reverse math, which is taking $70,000 $70,852, so $70,852, which is that current price that we see here with that hidden formula applied. And now we're going to divide that by the cash price, which is $44,644. And now we see that we are up nearly 59%. Which means it's not taking that base price and adding 37%. It's really taking that base price and adding almost, in this example, 59% more. So you are paying more than half extra of your cash system cost just to finance with a 3.99%. Now that formula is the same whether or not you go to a 4.99% or a 5.99%. We have different percentage rates and different fee options, but the math all works the same. So be very careful when you're selecting a loan option and make sure that you understand if you plan on paying that loan off much sooner than the entire term would allow, then you may want to go with a higher interest rate option like the 999 option. The 9.99% option is a zero fee option, which means that you're essentially getting the cash price up front, but you do have a higher interest rate. So as long as you pay off that interest or you pay off the loan much sooner, more likely within the first 10 years at least of that solar system loan that you have, if you pay it off within 10 years, you really will not see all those additional costs that you would if you went with a lower interest rate but a much higher fee option. If you really don't care and you're just going to take your loan to term and take 25 years to pay it off and you just want the lowest possible monthly payment, then it makes sense to possibly consider the higher fee option, even though it's a much higher fee than just what's listed and what you think you're paying for. All right, folks, thank you so much for checking us out. If you do like the content, please help us out by subscribing. It really just helps us to continue to produce this content. And if you're in the market for solar and you just want to get a fair deal, please reach out to us, give us a call, check out our email. We respond quickly and we're here to help you. Thank you so much and God bless.